Hey guys, so it looks like Germany's biggest bank, Deutsche Bank, is in trouble. It's so bad, even Jim Cramer likes it. Why? The short answer is that, like all big banks, Deutsche Bank is a fractional reserve bank, meaning it is permanently bankrupt. It does not have the cash. So the slightest morsel of risk can cause a panic. In fact, that risk came by the truckload these past couple of years when the ECB printed trillions of euros to finance COVID lockdowns and then yanked interest rates up to cover up the inflation. Of course, the Fed did the same thing, as did the Bank of Japan, really all major central banks. Note, this was also what crashed Silicon Valley Bank, bond losses from Fed hike. And it's a widespread problem, so there may be more banks to come. So what if Deutsche does collapse? Now, Deutsche Bank is gigantic. It's about 7 times bigger than Silicon Valley Bank. Relative to the German economy, Deutsche is more like 35 Silicon Valley banks, or a pair of JP Morgans if you prefer. Yes, banks are bigger in Europe because regulators in Europe serve the banking oligopoly even more enthusiastically than we do in the US, although we are catching up. Now, in the EU, bank closures work pretty much like they do in the US. So you get a combination of the central bank and government deposit insurance, and they have 3 options: close it, sell it, or bail it out. Now, Deutsche is too big to close. It's the 4th biggest bank in Europe, so that's not going to happen. Deutsche is also too big to sell off in little pieces. So they'd have to push a shotgun wedding like what they did in Switzerland last week, where you force another bank to buy the failed bank. Now, finding a husband is tricky because Deutsche Bank is so big, and EU regulators like to keep it in the family. They like to keep foreign banks out. So it may have to be a European bank, and there are really only 3 in the EU that are bigger than Deutsche Bank, none of them famously well run. So that brings us to the most likely scenario, a bailout, ideally one that's hidden from voters, which probably means either a huge line of credit, free, freshly printed euros, or a so-called bail-in where depositors take a haircut to keep up appearances, but taxpayers foot the rest. In practice, given Deutsche's size, you'd probably expect a combination of the two, so a shotgun wedding paired with a bailout, like with Credit Suisse, where the central bank forced UBS to marry Credit Suisse, but they also tossed in $100 billion to sweeten the pot. Just want to check my mic. Now, we don't know if Deutsche will actually fail. The EU is famous for paying to hide problems. So Deutsche could still get some free money to let it limp along, to make bigger problems in the future. Given how dishonest the EU is, that seems very on brand. But if Deutsche does get as far as Credit Suisse did, then you should expect massive bailouts funded ultimately by the money printer, in other words, by inflation. So EU voters will pay, whether in taxes or in their draining life savings, at which point the question would turn to contagion. Is this going to spread to other countries? Are there more dominoes to fall? Okay, we'll be watching it all. See you next time.